Backdoor Roth. If you have a traditional IRA or 401k, you're going to pay a lot of money in taxes when you withdraw the money. So a Roth IRA makes sense because it's tax advantage. The money goes in, it grows tax deferred, and as long as you've had it for at least 5 years, all the growth in that account is not taxed when you take it out. But here's the problem, and here's where most people fail. When most people convert to a Roth IRA, they withdraw the money, they pay the tax, and then they contribute what's left over into the Roth IRA. So if I had $1 million, if I took that out of my IRA, I'm going to pay about $400,000 in taxes. So I'm only going to have about $600,000 left over to contribute to my Roth IRA. That's $400,000 that you're forking over to Uncle Sam and the state unnecessarily. Money that could go towards your family goals, towards your retirement, your business, paying for your kids' college, whatever your goals are. What smart people do, and this is what we teach our students how to do in the Tax and Estate Academy, is you withdraw the money from the IRA account, but before you contribute it, we're going to look for tax incentives and credits because this is real money. This is real dollars from the IRS that reduces our tax liability dollar for dollar. And then we're also going to look for deductions and exclusions to income, which basically reduces the amount of taxes that we actually have to pay at the end of the year. And then we're going to contribute to a Roth IRA, or if we're really smart, we'll look for Roth alternatives, tax advantage alternatives like cash value life insurance, self-directed life insurance, which a lot of people are familiar with, or dynasty trusts. Either way, we're putting ourselves in a tax advantage position and being more efficient with our money now and in the future. So if you take $1 million out of that IRA, instead of a $400,000 tax bill, you'll probably be looking at $200,000 or $100,000, way less. Everyone's situation is different, so we don't know what your actual tax liability will be, but it will be a lot less than if you just did nothing. And so you have a lot more money left over to contribute in either a Roth IRA or a Roth alternative. So if you want to learn how to do these things, click the link below, join the Tax and Estate Academy, and learn exactly how to get these things done without spending hours on YouTube and Google trying to figure this stuff out. Just learn from experts that do this all day, every day.